Good day, everybody. Welcome to the Ocean Theory Forecast for Sunday, April 10th, 2011. This is Jim Sloman. My friends, I'm speaking to you now as someone who is increasingly concerned for the welfare of the United States. In my opinion, the U.S. has entered a period of time where we may begin to see things that we might consider unimaginable right now. In the commentary today, I'm going to discuss part one of the history of inflation to try to put into context some of the things that are happening now in the U.S. and the world. And let no one imagine that what happens in the U.S. will not severely impact the rest of the world. It will, and in ways that we hope to lay out for you. Not to mention that much of the rest of the world is going down the same path as the U.S., just at differing speeds. Believe me, it's all connected. But for now, let's look at the charts and see what's happened since the last Ocean Theory forecast. This is a monthly chart of gold, and here we have some of the most prominent Ocean Theory indicators. Over here we have indicators from Ocean Pro, and over here we have some indicators from Ocean Classic. So what do we see? First of all, we see a market that is in full bull mode. And one of the interesting things about gold in this bull market is that it is highly cyclical. Now, that's not true of many markets. We can force a cyclicality on them, but gold, the cyclicality really jumps out at us. By the way, I'm using this as a double top, and then another top here, another top here, another top here. And of course, these were very well pointed out by the NMC2, here, 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 here. And notice that if this cyclicality holds, which so far has been quite regular, we would expect another top in gold, which in my opinion would not by any means end the bull market in gold, but we might see a seasonal top in a couple of months, perhaps sometime over the summer months, which would then take gold into some sort of correction before resuming its bull market. The second thing I want to point out is that the BTX2 line, where the green line basically indicates bullish energy in a market, and the red line basically indicates bearish energy in a market. Notice that the green line here has been above zero or at zero through this entire move, going back in this case to 2002. So just following this one indicator alone from Ocean Pro would have kept you on the right side of this market. Another thing to notice is that every correction has been contained by the natural moving average here in blue, except for this one here, and that was indicated very well by this zero hit coming from NMC2 right here, indicating once it moved up again that this bullish move was highly likely to keep right on going. Notice over here that the fast is on top of the medium, is on top of the slow STX, and that the shadow is above price. Price is above all three of the triples, and shadow is above price. All of that is bullish. The BTX green bullish energy here is not only well above the center line here, but well above its own center moving average right here. And notice that the bearish energy in red is not only well below the center line here, but below its own center moving average here. So although corrections can certainly happen in any market, including any bull market at any time, until we see evidence of something like that, we would have to say that the conclusion right now must be that gold is continuing very much, both short-term and intermediate term, in its bull market. This is the component 4 line the interactions of these four lines, the fast, the medium, the slow, and the zero line, are very, very indicative of what's happening in a market. And what we look for in a bullish market is that what we call a positive fan formation, where the fast in blue is above the green, medium is above the orange, slow is above zero. And we see that except for this brief excursion right here, where it went down and basically below its lower standard deviation and then bounced right back up again, that the component 4 line has basically been giving us a positive rippling river all through this time and continues to do so. It is still in a positive rippling river, but notice that this appears, even though price has not pulled off, notice that this appears to be going down into what we call a compression or a singularity. Will probably happen sometime in here, which would provide energy for a further move up should that happen. Down here we have the BTX1 line. This is a non-directional trend indicator. That is, it simply indicates the energy in a trend or lack of energy in a trend, regardless of the direction of that trend. And the trend threshold here is 35. If the BTX1 line is above 35, we consider that the trend has some real energy going for it. And if it's below 35, we consider that the trend is not yet in full-fledged trend mode. Notice here that the BTX1 line is at 51, so that we're in full trend mode here. There's nothing really getting in the way of this. If this were to go to a higher level and then turn down, we might consider that a correction, whether brief or intermediate, was underway, but we don't see anything like that now. Over here we have the natural moving average from ocean theory and the fast natural moving average from ocean theory, and notice that the price is above both and that the fast is above the natural moving average. All of that is bullish. Down here we have the NMC2, which gives the basic shape of a market and is also capable of producing or not producing zero hits from above or below. And notice that right here it produced a beautiful zero hit, which has been powering this move up right here since then. Notice that just like the BTX2 line in green here, that the NMC2, which is based on much different mathematics than this, in fact all of these have wildly different mathematics, so when they start agreeing, it's very significant. Notice that this has stayed above zero except for this zero hit right here all through this move, and that in many cases it has bounced off its center moving average here, its natural moving average in green, and or its fast natural moving average in red. Most recently, look at the way that it's been bouncing off of its fast natural moving average in red, all indicative of a very highly bullish market, a market that gives every indication of wanting to continue to move up in spite of perhaps occasional setbacks. Right here we have the two bounded indicators, sometimes called the bounded rainbow indicators, meaning that they range between plus 100 and minus 100. And the interplay of these is also very revealing, similar to the interplay here of the component 4 line, except that the mathematics, again, is wildly different. So when they agree, it's very significant. And notice that right here, at the same point that we had the zero hit right here, we came down into what I call a compression here, where these two came close together and then bounced away and continued on their upward journey. As long as the NST here in orange is above the NDX in blue, we consider that we are in a bull market. And notice that it is well above, the NST is well above the NDX. And so another indication that this bull market is very much continuing. Down here we have the original NMC, which is capable of producing zero hits from above or below, which generally indicate the end of retracements in a major move. And notice that, for instance, here and here and here, all through here, we were getting zero hits indicating that the move was continuing. And now the gold market is entering another phase where it's not even getting back to zero. It's so bullish now that these retracements in the major trend are not even getting back to zero. Now they're bouncing off of their natural moving average here in green and then continuing up. So all in all, an extremely bullish picture at the monthly level. Here is a weekly chart of gold, and I'm calling this the up escalator because it is just a classic example of a bull market that just doesn't want to quit. Notice, first of all, that our NMC2, which provides the basic shape of a market, has remained, even at the weekly level here, has remained above zero throughout this entire move here, going back to early 2009. Notice that each of the retracements has been contained by the natural moving average, number one. Notice that the fast natural moving average in orange has stayed above the natural moving average all through here, number two. Notice that we've had periodic near zero hits here, 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 for instance. Couldn't even get close to zero here, but in each of these instances has been powering the next move up in the bullish environment. Notice here that the bullish component of the NMC2, the green line, has stayed at zero or above all through this move, periodically coming back to its center line here and here and here, or close to it here and here, and then bouncing off, indicating a continuation of the bullish move. People sometimes think that this is equivalent to like several moving averages, like a 5, 10, and 20, or a 20, 50, 200 or something. It's much, much different than that. It is varying itself in all kinds of ways all the time, in all sorts of levels, all sorts of time frames, in all sorts of methods. It is constantly adapting itself in various ways. So notice that price here was contained by the slow STX in each of these instances except for this one, and of course that was signaled here by a zero hit from above from the NMC2, as well as the green energy here never went below its center line here, as well as the slow component 4 line here in orange itself, which is a very good indication of trend, never went below zero. All of which indicated that this was going to turn around and continue its bullish movement. Notice now that the price has moved above all three of its triple STXs. The fast is above the medium, is above the slow. Notice that the shadow STX, which is phenomenal for calling turns in markets, is pointing up, indicating that in all probability a turn is not in the offering at this time. Notice that the green bullish energy is pointing up with plenty of room to go. In the component 4 line here, we do have a positive fan formation going on right now, which indicates again that the bullish environment is highly likely to continue at the present time. The BTX1 line, which measures the non-directional energy in a trend, is now above the trend threshold at 35, is at 46 and rising, indicating that this move here still has some legs and is highly likely to continue moving up at least in the short term. Here, not only did we get these near zero hits here, we now bounced off of not even zero. It couldn't even get back to there, and now has risen above both of its natural moving averages in green and red here and is pointing up. So again, a very bullish picture. In our bounded rainbow indicators, look at this beautiful compression right here, which basically gives energy to a market. Another one here, another one here. Not as pretty here, not as pretty here, but nevertheless still existing. And this beautiful one here, indicating that this market is like a coiled spring from here and has plenty of energy to move upwards, also indicated by this, of course. And notice the zero hits from above here from the NMC, just beautiful zero hits at each of these retracements, indicating that the market was ready to keep going. Here, didn't even get back to zero, bounced off its two natural moving averages, which have come together like a ledge, and then scooting up from there. Just all in all, a very strong looking up escalator. Here is a daily chart of gold, and I'm calling this a well-oiled bull machine at this point, even at the daily level. Notice, for instance, that the shadow is pointing straight up. Price is above all three of the triple STXs. The fast is above the medium, is above the slow. Price came down here into a retracement, was contained by the slow STX, and has bounced up from there. Here, the green bullish energy came down to the center line and then bounced off it. And equally important, the bearish energy came up to the center line and bounced off it again and is moving down even as this one is moving up. Definitely a well-oiled bull machine here. Let's remember that markets can do whatever they like in the final analysis. They are not constrained by anything. We're only ever talking about probabilities when talking about markets. But my goodness, does this thing look classically strong here. Notice in the component 4 line, we do have a positive fan formation here, where the blue is above the green, is above the orange, is above the white zero line. That's certainly bullish. Notice that we've got some good energy going here. It's at 42 from the non-directional BTX1 line trend indicator, above the threshold of 35 and rising, indicating that this bull move has some energy. Price is above its fast NMA, which itself is above its natural moving average. Notice that on a closing basis, the natural moving average contained this retracement right in here, and it also produced a zero hit from above from the NMC2. Then it came down here, couldn't even reach zero. And then here even a little bit higher and is now moving up. Again, a very bullish configuration. In the bounded rainbow indicators, we had a very nice compression right here, another one right here, and the NST is remaining well above the NDX, indicating again a bullish configuration. Notice these zero hits or 1 bar excursions here from the NMC. Here wouldn't even make it back to zero in these two cases, and has now gone above both of its moving averages and is continuing upward. Now, do we see at the daily level some slight cautionary signs? Yes. In what? In that the NMC2 is hitting its upper SD here. The NMC is hitting its upper SD. The component 4 line is above its upper standard deviation, and so is the BTX1 line, and so is the BTX2 line. And price itself is above one of its upper standard deviations. But that is a cautionary sign only. It doesn't really mean all that much until they turn down. If they go above these SDs but then turn down, that would give us more of a cautionary signal. But right now we're not seeing that, so again, it appears to be a well-oiled bull machine here. Here's a weekly chart of silver, and here we see a market in full parabolic roar. Price is above all three of its triple STXs. The fast is above the medium, is above the slow. Notice that these, which were designed originally as stop placement indicators, very sophisticated ones, have tightened up because the risk has increased. Once a market goes into a parabolic roar, the risk is increased that it could suddenly move down very suddenly as well. So notice that all three of the STXs here have tightened up considerably. The shadow is pointing straight up, and simply because a market is in full parabolic movement does not mean that it's suddenly going to correct. It certainly can, but silver appears to be well on its way to $50 and subsequently beyond that. Here, the green bullish energy didn't even get close to the center line here and is still moving up, is above its center natural moving average. Certainly a very bullish configuration. This is very interesting. Notice that even though price has not pulled back, that the component 4 line appears to be heading down into a compression here, a very beautiful singularity. Looks like what it's going to form, from which silver would most likely gather the energy to then continue its next move up. In the BTX1 line, the non-directional trend indicator, it didn't even get back to the 35 trend threshold. It basically just bounced off its lower SD, went above its natural moving average, and is continuing to move up now at 65. Now, if that were to turn down from this level, that would be significant and would indicate at least a short-term pullback in the offing, but we're not seeing any sort of turn down yet. So the idea is simply to tighten stops. Notice that price here is in still full-throated roar, above its fast natural moving average, above its natural moving average here. We had a couple of nice zero hits from above right here, and then took off very quickly past above its natural moving averages here, came down, bounced off its natural moving average, and is now continuing to move up. In the bounded rainbow indicators, again, we had this very nice compression here and here, indicating the start of this move, and then another very nice compression right here, indicating the continuation of the move. And notice that the NST is above the NDX, indicating a continuing bullish move. Observed down here in the NMC, zero hits right here, and then not even making its way back down to zero hit, but now bouncing off its natural moving average, and now not even making its way back to its natural moving average, but bouncing off its fast natural moving average and continuing up. So just an extraordinary market in full roar. Here's a daily chart of silver, and I've labeled it "Don't Get in the Way." Again, this is a market in a full-throated roar. Notice that the shadow is pointing straight up. Notice that the fast and the regular STX are hugging very tightly now to this move in silver, trying to reduce risk and closing the point where a stop would exist. The classic way to set a stop, you get off of 1/3 of the position. If it hits the fast, another third, a second third if it hits the medium, and a final third if it hits the slow. These two are now around 39.5 roughly. The stops are being definitely tightened right here, and the third stop has moved up to about 37 or so. Now, notice that these two, the fast and the regular STX, have moved close together and have opened up a gap between themselves and the slow STX. If they start moving sideways, if and only if these indicators start moving sideways and that gap were to continue, that would be a danger sign that the silver market could be in store for a rather significant pullback, but we're not seeing anything like that yet. Even though we have a gap here, they haven't started moving sideways, and so that danger signal is not yet triggered. So far, we're seeing very bullish movement with the STX very properly tightening stops to get you out quickly in this higher risk environment. The bullish green energy here did not even make it back to the center line here, has moved above its center moving average and is continuing up. So again, very bullish. Notice the very beautiful compression singularity we had right here, indicating continuing energy for this move. And notice that it is still in a positive fan formation here. Again, very bullish. The BTX1 line did not even make it back to the 35 trend threshold and has moved decisively up past its center moving average and is continuing to move up. Now, if at this level it were to move up into here and then turn, that would be another cautionary signal. But until we see such a turn, that is not cautionary yet. Over here, notice that price is above its fast NMA, which itself is above the natural moving average. This retracement here was contained nicely by the natural moving average, and on a closing basis was contained by the slow STX. Observe over here, the NMC2 in this move here quickly moved above zero, moved above both of its moving averages, and has stayed well above zero. Here did not even make it back to zero, simply made it back to its lower standard deviation, quickly moved up again, came down, and now has bounced twice off of its natural moving average and is continuing up. Very bullish. Notice here in the bounded rainbow indicators, this very beautiful compression right here, which gave a lot of energy to a continuing move, and now the NST is staying well above the NDX, indicating a continuing bullish move. Observe down here, the NMC came up here above zero very quickly, came down, bounced off its natural moving average. Here came down to a zero hit, a classic zero hit here, indicating again resumed energy for a move. Came up here, came down, bounced twice off of its natural moving average, and is moving up again. Just a classically bullish environment of a market in full roar. Slight cautions are that we have a gap here, and it would not be inconceivable to see the market fill the gap here before continuing up. We've hit the upper SD here, we've hit it here, we've gone beyond it here, we're very close to it here, and we've gone beyond it here, all of which would be cautionary if they turn from here. But until they turn, it's not even a cautionary signal yet. This is a market where it's a barreling freight train, and you simply don't want to get in the way of this. I actually know a few people who have tried to short this market. My goodness, some of the perma bears who have tried to short this market, they've just had their head handed to them, and I think trying to short this market is at this point is very close to insanity. Here's a weekly chart of the dollar, and here we see a market that is truly in trouble. Notice, first of all, that the shadow called this turn right here very, very well. Called it again right here. Price is below its fast STX, which is below the medium, which is below the slow STX. Observe the shadow here continuing to fall. Take in this bearish energy here continuing to rise. The bullish energy here in green is completely supine. Look at this negative fan formation here, where we have the blue is below the green, is below the orange, is below the zero. We have lots of energy here that not only are we above the trend threshold, but that the energy is continuing to rise, now at 41. Over here, price is below its fast NMA, which is below its natural moving average. Observe here how the NMA held the movement up here and then turned it away. In the NMC2, we came up to a beautiful zero hit from below right here of course, and then came down here, came back, was turned away by its natural moving average, and is continuing to move down. A very, very bearish picture. Observe the compression, the very beautiful compression from the bounded rainbow indicators right here, a secondary compression right here, right at the point where it's meeting its moving average, and then both of them moving down with the NST staying well below the NDX. Again, a very bearish configuration. Look here at the NMC, zero hits right here, a 1-bar excursion here, and then came down, came back, bounced off its natural moving average, and is continuing to move down. We could get a slight bounce this week because a continuing budget resolution was passed, but I don't expect that to amount to much, and I expect that will continue based on what I'm seeing here. I expect that the move down in the dollar will continue. That's very serious. We're talking about the United States dollar, and the repercussions of this down move are vast. It is indeed at a point where it could accelerate into a free fall downward at almost any time. Were that to happen, the repercussions would be unbelievably serious. This is a daily chart of the dollar, and one of the first things to notice is that the bearish energy here, all through this move, the bearish energy has not gone below its center line. It has either gone to it or stayed above it all through this move, even at the daily level. Equally significant is that the bullish energy most recently here cannot make it above the center line and is now moving down. This is moving up. Notice here that the shadow called this turn very well, called this turn very well. The slow STX contained this movement here, and that price is now below all three of its triple STXs and moving down. Truly an alarming picture. We have a negative fan formation right here, the blue below the green, below the orange, well below zero. Notice this beautiful compression right here, adding energy to the move, and another one right here, adding energy to the move. Notice that with this one brief excursion here, except for that the BTX1 line non-directional trend indicator has stayed above 35 or gone down to it to gather energy all through this move, and is now moving up with plenty of room to go. It's only at 43. It's got plenty of room to move up. The NMC2, the basic shape of a market, went below zero here and has stayed below zero all this time. The closest it even got to zero was this near zero hit right here, which was also on a closing basis contained by the natural moving average, and has since then not only stayed well below zero, but now has moved below both of its natural moving averages as well. Notice that price here is below its fast NMA, which in turn is below its natural moving average. Price here contained here like this. Notice the beautiful compression here from the bounded rainbow indicators. Notice how the NDX came up and was turned away by its moving average right here. This amazingly beautiful compression right here, indicating that a lot of energy was available for a continuing move down. Another compression right here where the NST came up and was turned away by its natural moving average very close to the NDX. Another compression here, and now both of them are moving down with the NST staying well below the NDX. Again, a very bearish picture. Notice the continuing zero hits here from NMC, and now couldn't even make it back to zero, bounced off this ledge formed by its moving averages here, and is continuing down. Again, we could see a slight bounce back here because of the budget agreement, but I don't expect that to amount to much. And we're looking at a very grim, very dangerous picture here for the United States dollar, which, were it to go into some sort of free fall and it doesn't have much support left, would have very dire implications across the entire globe. Here we have a weekly chart of crude oil. Certainly a market that appears to want to move much higher. Notice that price is well above all three of its triple STXs. Notice the shadow pointing straight up here. Notice the bullish energy just moving right up into the sky. The bearish energy here moving down into the basement. The bullish energy in green here came right down to the center line and then bounced right off it. Observe here how the component 4 line came right down to zero here and then bounced off it, and we now have a positive fan formation. Look at the way the BTX1 line is just moving straight up here with plenty of room to go. It's only at 47, has lots of room yet. Observe how price here is well above its fast NMA, which is well above its natural moving average. Witness here how the NMC2 did this beautiful zero hit here right at zero, giving lots of energy to the move up from there, and is now not only above zero but above both of its moving averages. Came down here and couldn't even make it down to this moving average and is continuing to move up. And this is not a bounded indicator, so this has still plenty of room to move up. In the bounded rainbow indicators here, look how this came down just a 1-bar excursion here below zero and then bounced right up. The NST is remaining well above the NDX, and it has room to go. It's in 71, so it still has room to move into the 80s and 90s. The NMC here came down a 1-bar excursion below zero, then went up, came down, basically bounced off its fast moving average here, fast natural moving average, and is continuing up with room to go. However, I think that oil, very short term, could have gotten ahead of itself. And why do I say that? First of all, because the STXs are capable of being very responsive. They're extremely sophisticated. They're far beyond regular moving averages, even exponential moving averages or adjustable exponentials. They're far, far beyond all of that. And so they're capable of following this price very closely if that is warranted. The fact that they're holding back indicates that price may have gotten ahead of itself here and may need to come back down into this area to gain some energy before moving back up here like this. The second thing that makes me say that very short term oil may have gotten ahead of itself is this gap here between the bullish energy in green and the bearish energy in red. That gap has gotten quite large now and could signify that the market has gotten ahead of itself. Now, it doesn't mean it can't continue moving up from here. A market can get even more ahead of itself, but there is something of a caution flag here. And the third thing that makes me say that is, notice how the component 4 line has opened up quite a big gap between itself and the medium and the slow component 4 lines. That again indicates a market that may be getting ahead of itself in the very short term. A little farther out, I think oil is most likely headed for much higher prices. This is in general, a very bullish picture with the caveats that I've mentioned. This is a daily chart of crude oil, and not the last time, but the time before that, right here, I said that the market was strong but maybe have gotten ahead of itself short term. And indeed it had. It moved down into here like this, and then came up here, and then the last time, the last ocean theory forecast, I said it would most likely move sideways and then up, which indeed it did. I said that right here, and it moved sideways in this area here, and then up like this. What I'm saying now is that we're not seeing any turn down yet, and I'll explain that in a moment, and the market could go parabolic. What are we seeing? We're seeing price here well above all three of its triple STXs. We're seeing the shadow pointing straight up. We're seeing the green bullish energy not only during this move, during this excursion back in here, the green bullish energy did not even get back to the center line, and equally important, the bearish energy was turned away near the center line and continued moving down. And this is now continuing to move up, all of which is a bullish environment. Observe here how the component 4 line is in a positive fan formation. You had a compression right here where the green line came down close to 0, another compression right in here, a positive fan formation going on right here, certainly bullish. Notice here that the BTX1 line did not even make it back to the 35 trend threshold, made it back to about 36 or so, and is moving straight up from there with room to go. It's at 56, but could certainly move higher. Observe over here, the NMC2 came down to this near zero hit right here, right in here, then went up, came down, bounced off of its natural moving average twice, the one in green, and then has moved up from there, certainly bullish. Notice the NMC here, we had 2 zero hits from above right here, could not even make it back to 0 here, bounced off its natural moving average, and is continuing to move up. And observe how in the bounded rainbow indicators, the NST is staying above the NDX, which itself is above the natural moving average, and all of them are above 0. However, there are some caution flags here. I do believe that this market, as I said, at the weekly level may have gotten ahead of itself. And why do I say that? Number one, because this is now at the 90 level. That's what this red dot indicates. That often indicates a market that needs to either move down a bit or consolidate for a while to gain energy. I think that basically oil just needs to perhaps consolidate a bit in this area, gain some energy from the consolidation, and then move up again in this area here. Another caution flag is the fact that price has gone above both of its upper standard deviations here. It's gone above this one here. It's gone above this one here. Of course, we have the 90 level, the red dot right here. It's gone above it right here, and it's gone above it right here. However, until we see turn downs, it's not enough that these indicators go above their upper standard deviations. They have to turn down from there and go back below those standard deviations. Then we can get concerned. So I do see caution here, both at the daily and weekly level. Very short term, I see caution, perhaps some consolidation. But beyond that, I see oil most likely moving much, much higher to areas that would seem almost inconceivable right now. This is a weekly chart of U.S. Treasury bonds. And the last time we said top out soon, that was right here. We said top out soon. This time we say it's still deciding, but leaning down. Why do we say that it's still deciding? First of all, because the component 4 line right here is in a tight area where it's basically making up its mind and could go either way. Whichever way it starts coming out of this tight area here will be a distant early warning of where it's likely to go. Yet it's leaning down. Why do we say that? These two are very close to each other, but it looks as if the bearish energy is bouncing off the center line here, and equally important, it looks like the bullish energy is bouncing off it as well, but heading down. However, the BTX1 line is still below the trend threshold of 35, and so in order to confirm that this down move is likely to keep going, we'd want to see that head above the trend threshold of 35. Over here we do see, and this is why we said leaning down, we do see the NMC2 has done a near zero hit right here. Not only a near zero hit, but very close to its natural moving average as well, and has turned down from there. And in the bounded rainbow indicators here, we see a very nice compression, and they have turned down from there. And we have a zero hit right here from the NMC, and is also moving down. So what would we want to see to confirm that this leaning down is probably going to turn into something bigger and larger? We'd want to see, first of all, a negative fan formation form here from the component 4 line. We'd want to see the BTX1 line move above its 35 trend threshold. We'd want to see a confirmation that the bearish energy is going to continue moving up here. We'd want to see the NST move down below its natural moving average here. All those things would be by way of confirming that a good move down is underway in the U.S. Treasury bonds. Here we see a monthly chart of the Japanese stock market. By all rights, this market should be moving strongly down since Japan has all kinds of problems at this point. But the Bank of Japan is pouring in tons of money. For example, it poured $400 billion into the economy in 3 days, which is, as far as I'm aware, the largest amount of money in the shortest amount of time ever put into an economy by a central bank in the history of humankind. So with that kind of money pouring in on an almost regular basis, it's hard to see how this market can go down very far. Certainly, there's a rather titanic struggle going on here, because in the absence of that money, the market would probably move down very strongly, but with that money, it's resisting it. Now, what do we see though? We see a zero hit from above here in the NMC2, and we see a zero hit from above here from the NMC. So what would we need? Those are setups for a positive long position, but what would we need to see to confirm that we might want to get long here? Well, for one thing, price is below both of its natural moving averages here, so we'd need to see price move above those moving averages. Price is below all three of its triple STXs here, so we'd need to see it move above that. We'd need to see the shadow turn here. The bullish energy is still dominant, but we'd need to, it's right at its center moving average, so we'd need to see it bounce off of there and start moving up. We have lost the positive fan formation here, but we do not have a negative fan formation either. So to confirm these signals here, we'd want to see this move out into a positive fan formation. And lastly, we'd want to see the BTX1 line move above the trend threshold of 35, indicating that there was enough energy to power this thing up. Notice, by the way, this very beautiful compression right here, confirmed by right here. And notice how the NDX came down and almost touched zero right here, and how the NMC2 came down below its lower standard deviation, but did not even make it back to its natural moving average, let alone zero, and then bounced up here. And then on the other side, as you came down here, it came below zero, came up here to a beautiful zero hit from below right here, indicating that energy was available for a good move down, which of course happened right here. At the same time, the NST came up here and had a very nice compression with both zero and its natural moving average, and then moved down here like this. And you had a 1-bar excursion from the NMC here, which then quickly moved down, stopped by its moving averages right in here. All very classic and beautiful. Came down here, for instance, stopped by its moving averages, now has passed above zero and given this zero hit from above here and here. But as I've said, we would want to see various types of confirmations from the other indicators before we would take the risk of going long in this market. Here's a monthly chart of the U.S. stock market, the S&P 500. And again, I've labeled it tons of money. Certainly there are many very large structural problems with the U.S. economy, starting with a true unemployment rate of 22% as measured by Shadow Stats. Nevertheless, it's hard to argue with somebody who has an unlimited checkbook, and the Fed is pumping in money on a daily, weekly, and monthly basis. So this market looks like it wants to continue up until proven otherwise. Notice, for instance, the bullish energy here bounced off of its center line and is moving up nicely. This bounced off the center line and is moving down. We have a positive fan formation going on right here. Notice the compression that happened right here, giving extra energy. The same thing here, the slow STX stopped this retracement right here. Over here in the NMC2, it went above zero, then came back and bounced off its fast natural moving average, then moved above zero and is continuing above zero. Notice this very beautiful compression here from the bounded rainbow indicators right near zero, compressing with each other and near its natural moving average. Just an extraordinarily beautiful compression, indicating that there was lots of energy to come out of here and move the market up from here. And of course, in the NMC, it came down here, bounced off its natural moving average twice, has now moved above zero. From the BTX1 line, we notice that it has moved above the trend threshold. It's moving up quite strongly and has plenty of room to keep going. We do have slight caution signs. Number one right here, it's up at its upper standard deviation and it's moving sideways, could be turning. And right here we have possibly a turn. But I wouldn't get too concerned about that unless we see some caution signals coming from here, or here, or here, or here, where price started moving below one or more of its triple STXs. We're not seeing any of that now, so at most I think we'd probably see for now a consolidation. But this market looks, based on the ocean indicators, in spite of any consolidations it might do, it looks like it wants to continue upwards for now. This is a weekly chart of the U.S. stock market, the S&P 500. What we observe here is a market that is mildly bullish, we might say. It is just above its triple STX right here. The bullish energy has diminished somewhat, but it is still dominant. It's still pretty well above its bearish energy here, and it's moving sideways to slightly down. The bearish energy is moving slightly down, more sideways. We have a positive fan formation here, but it's still a very small one. And we have the non-directional trend indicator here is still above the trend threshold of 35, but it is moving down. And we have a cautionary sign right here The NMC2 is still positive, still above zero, but it did bounce off its natural moving average right here and is pointing slightly down, so that's a cautionary signal. Price, we notice, is above its fast natural moving average and its natural moving average, and the fast NMA is above the natural NMA, all good. Nevertheless, we notice a turn down right here, and these two are moving sideways, all of which is indicating sort of a mildly bullish atmosphere with some caution flags flying. We'd probably want to take a closer look over the next few days to see basically which way this market wants to resolve itself. It looks, as I said, mildly bullish, but with some caution. So based on what we're seeing at the monthly level, that this is a market that wants to continue upwards for now. But at the weekly level, we're seeing some mild caution signs, and they're only mild at this point. They are not strong caution signs yet. This is a weekly chart of copper, Dr. Copper as it's often called, because it is so central to the global economy and so indicative of the global economy. And what do we see? We see that price has passed above all three of its triple STXs here. We see that the bullish energy, though it has come down, has appeared to stop going down. And equally important that the bearish energy appears to have bounced off its center line and is now moving down. We notice that we have a singularity going on here in the component 4 line. It will be very interesting to see which way it comes out of that singularity. It could go into a positive fan formation or a negative fan formation. Based on other clues we're seeing, we expect it to go out into a positive fan formation. Price is above both of its natural moving averages. Here's a good clue as to which way this is going to come out here. Notice that the NMC2 has bounced off of its natural moving average twice and is moving up. We have 2 0 hits from above right here, and it is moving up. NST, while it has moved down, and so has the NDX, now this is pointing back up, and this is moving sideways to slightly up. Both are staying above zero, and the NST is staying above the NDX. All of which tells us that it's most likely that this component 4-line singularity will resolve into a positive fan formation, which we're waiting to see, and that this will turn back up. This will go down some more. Finally, that the BTX 1-line trend indicator will turn back above its trend threshold of 35 and continue up. That's what we expect to see. Therefore, that tells us that the global stock markets are not likely to get in trouble yet unless something very unexpected happens. And if it does, it would probably start showing up here in copper, and we're not seeing warning signals yet from Dr. Copper, and so we're entitled to think that most of the stock markets in the world will be inclined to be in a bullish environment until proven otherwise. In this history of inflation, I'm indebted to a number of very able researchers, among them Ralph Foster in his admirable book, Fiat Paper Money, Peter Bernholz in his very thorough book, Monetary Regimes and Inflation, Andrew White in his book, Fiat Money, Inflation in France, Adam Ferguson in his book, When Money Dies, my own book, Song of Existence, and many other historical researchers, including Charles Kindleberger, Constantino Bresciano Tironi, Charles Mackay, and others, and a number of very able analysts of our current situation. I am indebted to all, most of whom must go unnamed for reasons of space and time, for their painstaking research into the various dimensions of our current subject. To look at the history of inflation, let's begin with the invention of money itself. Many things have been used as money, including cows and grain, copper and iron, But gradually, humankind settled on gold and silver as money because they both embody characteristics that were found to be highly desirable. Both gold and silver were durable, lasting through time and unaffected by most chemical processes. They did not rust or rot or mildew or disintegrate with time. Second, they were relatively rare compared to most other things, so that they could serve as a store of value, so that a relatively small amount could convey a considerable value in transactions, and perhaps most importantly, so that they could not be endlessly duplicated. Equally important to these first two characteristics of durability and rarity were that gold and silver were fungible. That means that an ounce of gold is exactly equal to any other ounce of gold. An ounce of silver is exactly equal to any other ounce of silver. That is not true of most things. So we know that at least as far back as 2400 BC, silver was being used as a medium of exchange in Sumeria in what is present-day Iraq. There were no coins, rather silver was weighed out for each transaction, which, by the way, is also what happened after the fall of the Roman Empire. After Rome fell, the value of coins was no longer reliable, so in the Dark Ages, either barter was used or gold or silver was weighed out for each transaction. But that's getting ahead of our story. The first standardized coins appeared in the 6th century BC in Lydia by none other than the famous King Croesus, who mandated that all coins must be issued in either refined gold or refined silver. One of the primary reasons for the fall of classical Greece was that various rulers of the Greek city-states discovered that they could issue more coins by decreasing or debasing the value of the silver or gold in a coin, and thus seemingly get a free lunch by paying for more royal soldiers or other royal expenses. By no accident, a virulent inflation gripped the Greek city-states in their later stages, which hollowed out their economies and prepared the way for their conquest by Rome in the 2nd century BC. These shenanigans were not lost on the Roman emperors, who, beginning with Nero in the 1st century AD, began debasing the Roman silver coin, the denarius, in order to make more of them for spending by the imperial government. Over several centuries, the content of the silver in a denarius coin went from 100% to 0%. Not surprisingly, a virulent inflation gripped the later stages of the Roman Empire, which over time destroyed the Roman economy and prepared the way for the successful invasion of the barbarians in the 5th century AD. But if you want to really crank up inflation, nothing beats paper money, which can be duplicated and thus debased far more easily and cheaply than gold or silver coins. Paper money depended on 3 Chinese inventions: paper itself, invented around 100 AD, fluid ink, invented around 400 AD, and block printing, invented around 600 AD, all in China. Thus it is appropriate that paper money also first appeared in China around 1100 AD. Paper money started out as receipts for what was considered real money, that is, gold or silver or copper or iron. In the province of Sichuan, China, in the 11th century, the primary money was copper coins. However, the province began to run out of copper, so coins made out of iron were substituted. But iron, as you might imagine, is very heavy to carry around for transactions, so merchants got in the habit of depositing their iron money in a warehouse and obtaining a receipt for their deposit. At some point, merchants discovered that they really didn't need to have the actual iron money on hand for each transaction, which was incredibly cumbersome anyway. Instead, they could simply transfer and sign over the paper receipt for the iron held in the warehouse to someone else to pay for something. Thus was paper money born, and the private warehouses became, in effect, the first banks. But in a move foretelling many other such moves in the future, the warehouse owners quickly discovered that they could issue many more receipts than they actually held in iron money on deposit, thus making lots more profit. Unfortunately, this quickly destroyed the reputation of the warehouse merchants and thus of the receipts themselves, which quickly became worthless. So in 1024 AD, the Chinese imperial government, known to history as the Sung Dynasty, prohibited the issuance of paper notes by private merchants and issued the first national paper money for general use, called Qiao Zhu, meaning bills of exchange. This first paper money was far more convenient than the iron money it represented, and so the public readily adopted it. Unfortunately, the story doesn't end there. The Sung Dynasty, also foretelling countless other moves by countless other governments in the future, discovered quite quickly that they could establish the value of the notes and then print as many of them as they liked to pay for soldiers and other current expenses. Eureka! This was like discovering suddenly that you were actually worth $1 billion bequeathed to you by some long-lost uncle. It was free money for the government as much as it pleased. Here at last was the proverbial free lunch, money with real value from nothing. Less and less need to bother with pesky tax collection from disgruntled peasants. Unfortunately, too, the emperors printed more and more and more of this paper money as time went on, and so over the course of a century, from 1024 AD to 1127 AD, the value of this first paper money declined to, you guessed it, 0. Not coincidentally, the Sung were invaded by the Qin from up north in Manchuria and defeated. To be continued. That's the ocean theory forecast for April 10th, 2011. Because of the Easter holiday on April 24th, the next ocean theory forecast will be in 1 week on Sunday, April 17th. In closing, I'd like to read you today a Zen proverb. Here it is. Tension is who you think you should be. Relaxation is who you are. That's all for today. May every possible good fortune be yours until we meet again. Bye-bye now.